I don't know a single financial advisor that I've met in the last couple of decades or so who wouldn't be willing to have a 30-minute conversation with somebody.
My nickname in one of the companies was called Commission. So it was a barrister friend of mine that said, "Oh, Richard, you're like an academic salesman."
Hello everyone, welcome back to another episode of The Way of Wealth with myself, Brajesh, and my co-host, Mohammed. And we've got a brand new guest for you, Richard Ansah. Welcome.
Yeah, thank you for having me.
You're welcome. You've been called the academic salesman before. Can you tell me more about that?
I've been called a few names in the past, but academic salesman, yeah, it kind
What
of
were the other names, Richard?
Yeah, I can't really repeat that one here. But,
Alright, cool.
With the academic salesman, so what happened was I was always in some kind of sales role, but growing up, life was very much like, Richard, you got to do well at your school and go to university. And so I left uni at age 28. So a couple of master's degrees, I did PhD research. But I got married at quite young at 24. So my mindset was very much like, I've got to make money now, I've got to be responsible.
Right.
So I went into sales. Okay. And my nickname in one of the companies was called Commission.
Right.
So it was a barrister friend of mine that said, "Oh, Richard, you're like an academic salesman. Like, so I like to study and I like to sell." Yeah. That's kind of, it just stuck basically from there.
What else can the young people do to upskill their financial and legal literacy? Apart from watching this podcast and liking and subscribing.
Oh yeah, definitely. they definitely. And also follow
follow Richard.
TikTok page and Instagram page. I mean, Richard covers some great content on his channels.
Yeah. But apart from us, we're generally.
Apart from that, I think financial literacy is something that they definitely need to engage in. I say, financial advisors are some of the nicest people. Mm-hmm. And I'm privileged to be part of the regulated financial planning and estate planning industry in the UK. I don't know a single financial advisor that I've met in the last couple of decades or so, all right, who wouldn't be willing to have a 30-minute conversation with somebody. Mm-hmm. They may not do any business with you, okay, but they would be willing to give you their time. And I think young people should literally pick up the phone or go onto Google, as it is today, all right, and find a local IFA and just pick up the phone and say, "Can I have a chat, please?" Mm-hmm. You'll be surprised how much you would learn in that 30 minutes for a very young person. You'll cover off the importance of budgeting. They'll cover off the importance of lifestyle protection. Mm-hmm. What does that mean? Okay, why is it so? Why is it important you put it in place while you're so young, as opposed to waiting 10, 15, 20, 30 years later on down the line? Do you know, if I've also had a thought, right? A lot of people, they may not need any inheritance tax planning advice if in their 20s they took out a whole of life cover, right, or a long life term policy, structured correctly. They may not need someone like me, nowhere near to the degree that they need me if they left it all late. And this is what I said to my daughter, and I've said it multiple times. As soon as you get your first job, you have to put in place a life insurance policy. Mm-hmm. You have to do that, forget anything else.
Yeah. But I want to jump in here because, and it's not to knock IFAs,
yeah,
but you still got to pick them wisely, because some think life insurance is for those over there, yeah, and we just want to speak to people who have a bunch of money or a pension. Yeah. So it's all about the Benjamins, as opposed to the holistic view. I'm not saying all, but there are some out there. Okay.
Yeah, no doubt, I agree.
And then you also you are a little bit biased, with respect, because you are not just a financial advisor, but you have a heavy shoulders, shall I say, with a head of knowledge with estate planning and private wealth advice.
Thank you.
So you're coming from a different angle. Most IFAs or financial advisors I meet, and there's nothing wrong with that, but their job is to accumulate wealth. They don't think about the protection of the wealth. They don't think about the distribution of the wealth. Their job is lifestyle planning and later life planning and making sure you've got enough
grow their funds under management,
in
essentially.
the pot to make sure you can enjoy that life.
Yeah.
And make sure it's above inflation, so you're winning, and that's fine.
Yeah.
But then there's no exit plan.
Yeah.
Hence why we come in and say, well, what's your exit plan?
Yeah.
And so even when you start a business, right? So if you know the end from the beginning, or try your best to navigate that.
Yeah.
So come back to the advice you give your daughter. Fantastic, yeah. Life insurance, get it cheap while you're young, get as much as you can that you can afford and maintain it. And obviously understanding, compounding interest and et cetera, et cetera. Brilliant. So you're now balancing the protection of the life insurance with the accumulation of wealth. But some people don't even understand that. And I don't necessarily think the manuals talk about certain elements of wealth planning that you and I would be aware of.
Yeah, no doubt.
That they can actually give the advice. Yeah. And then there's the other side of the coin, and maybe I'm playing a little bit of devil's advocate, that some people giving the advice don't actually live it themselves or understand it themselves or have a philosophy themselves to make it relevant. It's just a tick box exercise. So how do you sit in front of an advisor for 20 minutes or half an hour time that can say, right, this is the best advice I can give you based on experience versus this is the best advice I can give you based on a textbook. And I'm not saying it's wrong, but there is a difference. I think there is a big difference. And I think people who have run businesses or who've gone broke before, who understand how money actually works versus, I've read a book, passed some exams, and now I'm qualified, is chalk and cheese.
Yeah, there's no substitute for experience, Richard. I fully agree with that. This is where within, especially in the within our industry, because you've passed some exams, doesn't make you a great advisor. There is the softer skills are so much more important.
Yeah.
It's what I'm saying is the textbook lays the foundation. It's your maturity that will then allow you to enhance your wisdom. And it's that wisdom that really begins to change the game for that particular client of yourself.
Absolutely.
And I would also argue that, and this goes across all of us, by the way, we shouldn't just be specialists, right? We should have a culture of learning, because our clients come from all sorts of backgrounds. They have all sorts of pain points. They're going to ask about bonds. They're going to ask about investment markets. They're going to ask about the economy. And because you are a trusted estate planner who's managed to preserve all of this wealth using family investment companies, trusts, like nobody else has done otherwise, they're also going to pick your brain about what Trump is doing, what Keir Starmer is doing, okay? Because you're a trusted person, because they've come across somebody, do you know what? He says some really interesting stuff and he's made me think about stuff that I didn't think about in the past. So I think, couple all of that with a culture of learning would play a very, very important part,
Definitely.
in how we navigate, modern challenges.
It's important. It's vital, I think. And I think you're right, that culture of learning for all of us. So the IFA world, I need to learn more. So I'll speak to you or other IFAs in certain areas, because it's like, well, you just need to understand. But I do a lot of teaching to IFAs who just have no idea about trusts, for example. Or,
I know.
And then also our heads will be like, oh, I've got £1 million life policy. Oh, great, is it in trust? Yeah. Or who's your trustees? To get rid of the contentious matters, all these things that we will go into by default, that maybe other professionals, because it's not exposed to it yet.
Correct.
So even just having a wider network of people to communicate and liaise with and get just feedback and all that kind of stuff is so vital.
It's only in the last few years that these two industries are coalescing, okay, and increasingly so. Because you've got this huge property boom and you've also got the generational transfer happening. So there is a huge criticism of, I would say, both the IFA world and also the estate planning world, because there is not yet, well, actually within STEP there is, okay, but overwhelmingly via LIBF or the CII, CISI, there's not a qualification yet that can combine both of those disciplines.
Why don't we write one?
We can
And then
write
we can
one.
sell it and make a lot of money.
My task list is already.
But I want to throw something in the mix. I'd also say the legal world
Yeah. Oh yeah, definitely.
needs to be in that mix as well.
No. So in the estate plan,
Yeah.
I'm using solicitors in that space as well. Yeah, but solicitors don't know how to use a CRM. I mean, that's another topic in of
We'll add
itself.
that as a module in the exam.
Exactly.
I wanted to pick up something really interesting you said earlier when we're talking about your contentious case.
Oh,
and
yes.
I asked yourself if you've dealt with that, and you said all the time. And then you said this is why trust planning is really important because it can protect against potential future. What do you call it?
Future threats. Future threats to the family wealth.
That's it. Okay. So
in part, yeah.
yeah. So I mean, for the audience, what are the simple things that people need to know about a trust? Because when we talk about it with clients, it can get really complicated in terms of. I won't get into it, but if we needed to break it down and say, okay, this is a trust in very simple terms, and this is why you need it because it protects the wealth.
Richard, over to you. How would you approach that?
I always start with what is your agenda, what's your goal?
Yeah.
And if they can define that to me in a way that makes sense, then I can challenge their thinking and then I can bring in trust because then it will make sense to them. So for example, just one client that springs to mind, like, right, I want to put my son on a property. The house is in the mum's name. She's hitting 90, so I'll put the son on the property. Then don't have to worry about changing the mortgage over, and because it's in my son's name, I don't care about stamp duty. I can afford all that. Blah 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 blah. So I said, great, no problem. But what happens if your son gets married, or what happens if your son gets divorced after getting married? Oh. And but what about capital gains tax? Oh, my broker didn't tell me about that. Okay, well that's gonna be a big problem for your mum. And then so on and so on. So you just throw all these things. So I said, so the versus, if you look at 24% capital gains tax, and I think he says about 11 grand of stamp duty. You add that all in, and I think he bought the house at 50 grand. It's worth 550. So you can do the maths on that, right? And I think he works at maybe 30. Well, whatever the numbers was, it's high. Versus, well, if you use the trust. And bearing in mind, your mum's a widow, so she's got £1 million allowance, and she's only 300 grand over her allowance. So we're looking at saving 300,000 at today's market value.
Yeah. So which allowance? 300 grand.
This is so. Okay, so let me backtrack. Sorry, because I'm looking at Mohammed. I'm presuming everyone understands, right? So for those who don't understand inheritance tax, everyone's got a basic allowance of £325,000.
Oh yes.
And if you own a house and occupy the house and have children, you get an additional allowance of 175,000. If you're married, then you can claim allowances through the Inheritance Tax Act and have up to £1 million allowance.
Yes.
So if you're a widow, you're still technically married. So if the spouse dies today, even if the deceased dies 20 years ago, you still can claim £1 million allowance.
Sure.
So that's bringing everyone up to speed. Yeah. So her wealth was 1.3 million. So she's 300 grand over what HMRC would be looking at. Yeah. So I'm like, well, look, if you put your son on the property, you got an effective tax rate of, I'm just throwing it out of the air now, let's say 50%, yeah? And if you set up a trust, we can defer the capital gains tax, so you don't have to, that's a lot of money you can kind of put to another time. Your son can still be benefiting, but the trust will own it rather than your mum. So then it's not a problem. So then I said, the only thing you've got to worry about if your mum passed away is paying off all these mortgages. So we're getting to probate world now. Because the inheritance tax, the Finance Act 2013 basically was changed. And so basically we can't grant probate. Grant of probate is basically where you're saying like you can now transfer the wealth to your beneficiaries. And without that, HMRC won't allow it. And then if you don't pay the inheritance tax and don't pay for the liabilities, then you're stuck. You're in this vicious circle of not able to transfer wealth, and hence you get all these court cases, okay? So I said to him, if we could just get life insurance for say £1 million, bearing in mind that if it's your mum's disposable income can cover it, we can even write that off as well. We're saving you say £35,000, £50,000 to put your son on this property. And then he said, oh, so he's confused, but I'm saying, well, imagine you can save 50 grand, and your son's protected, your mum's covered, and you can still transfer the properties into your name later on when she does pass away.
Yeah.
Which one sounds better? And bearing in mind, do you want the generational wealth aspects, or are you just thinking short term? So then when he finally kind of clocked, I said, right, so now we can use a trust for that. No problem at all. Your mum can utilize it and there's no issues. So I'm using teaching and storytelling, I guess, to help the client realize what a trust is, rather than going technical, like, well, do this, 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 and this.
Right, I see.
Because then if they understand it, this is sales now, I guess, isn't it?
Yeah,
if
yeah.
I tell them,
Yeah.
they won't believe me. If they say it's fine, then it's right. So I'm always down the teaching route.
Sure.
Yeah.
And hence why the competency now comes in with understanding why we need to know what we know.
Right. Yeah.
Why other, like a mortgage broker or a financial advisor may not understand triggers of tax.
Yeah.
Yeah.
We have to kind of understand all of the triggers of tax,
Yeah.
and then get them to understand that. And rather than the noise that you get on the internet, like, I think I need this product. Well, why do you think you need this product? Let's challenge that thinking.
Right, okay.
So they'll trust you because now they understand that you're trying to get them to win.
Yep.
And then you can work with the team to get a resolution. And then hopefully that will stop any challenges. And I think in our world, many professional advisors don't always think about the probate, they just think about today.
Yeah.
And that's a really big problem. Like, think about the exit plan too.
Yeah.
So when you're drafting your will, you understand that you don't want a family to go through all these problems. So get the life insurance, get it. So if you don't have a life insurance, right, well, what's the exit plan? What's the mitigation of risk?
Yes.
Yeah, LPAs are important.
Yeah.
Life insurance is simple, but it will save lives. Get it in trust, etc., etc. Have you considered all these other aspects? So we're just trying to make sure that, again, they're well informed. You make the choice, but you can't say you didn't know. And that's the only thing I don't want to hear, ever. We didn't know.
Thank you for watching and tune in for our next video for part 2.